Wednesday morning. Welcome to another hour of Squawk on the Street. I'm Carl Quintanilla with Morgan Brennan and David Faber, live at Post 9 at the New York Stock Exchange. We kick off February with the Fed meeting today. Some high-profile earnings, lots of data, ADP, PMI, and now ISM JOLTS. Let's get to Rick Santelli.
Yes, construction spending for the month of December expected to be unchanged. Remember, construction spending, like much of the cottage industry of housing, has not fared well with higher interest rates, and this number is no exception. Down 0.4%. Down 0.4%. That's the weakest since August, when we were at minus 1.1. This, of course, has one silver lining. The last month's read up 0.2, now becomes up 0.5. So indeed, we did borrow a bit, but still, net, not what we expected. ISM manufacturing for January, 47.4, and that isn't a good number. That's the weakest since May of 2020, and that ends up being the third in a row in contraction territory. If we look at prices paid comes in at 44.5. So it moved from 39.4, which was the smallest month-over-month change in prices paid going back to April. And indeed, it continues to move up. That is the fourth month below 50. And one of those months, as I said, was actually under 40. Prices paid, of course, being on the downside under 50 is a good thing. And if we look at employment, considering it is the week of employment, 50.6 unemployment, that's a pretty good number. That's followed by 50.8. That was revised from 51.4 several sessions ago. It's still in expansion territory, and new orders, 42.5. That is not a good number when you consider sequentially following 45.1. And 42.5 is the lightest level also since May of 2020. These are not good numbers. That represents 5th month in a row on new orders being in contraction mode. And finally, job openings and labor turnover, known as JOLTS, 2 months in arrears. It's a December number, 11,012,000. 11,012,000, much better than we were expecting. Look for interest rates to pop a bit on this, because the Fed, counterintuitive as it might be, does not want to see job openings this aggressive, especially with quits being aggressive. Last month was downgraded just a tad from 10